$5,188.91. That is where the $1,000 challenge currently is sitting. The $1,000 challenge where I started with $1,000 trying to grow it as fast as I can. And with NIO, it has been pushing upwards. You are listening to the StockInvest.us podcast, Trading Tips with Jim, and then I will be Jim, of course. In this week's podcast, we will look at the market and the week ahead of us. It will be week 39. Doing so, I will ask AI a little bit, and at the end of the podcast, I will give you the $1,000 challenge and the next steps. The goal of this podcast is, as it's always been, it's the 6th season doing this podcast, help you grow your profit and reduce your losses is the best way to do things. We will not make it a very long podcast. Last week I asked about Grok and OpenAI how they think this week, it's currently a Friday, how this week would go. Grok said that it thought market would end red by 2%, while OpenAI's ChatGPT, my own Gaia, said it thought markets would end up 0.5%. The trading day for Friday has not yet started, but so far this week the market is up 1.49%, so Grok is very much off, while Gaia and OpenAI is closer. The futures are red. It will be very interesting to see exactly where it will end. But it doesn't look like market will fall by 3.5%, making Grok correct. So far it looks like OpenAI is better. And in general, that is one thing, one same conclusion I have drawn over using AI for a very long time, following all the models, that OpenAI is sharper. Grok is wilder, more fun, and for sure is knowledgeable. But if you use them, I would put more faith into ChatGPT, and Gemini is also a very good one. And in this podcast series, one of the things that I always try to do is help you understand what is happening and present tools that can make things easier for you. And AI is absolutely one of the tools that you should start to use. You just have to know a few of the drawbacks, but in general, it's getting better and better. You just want a competitive edge. One of the edges is knowledge, and there is, in my opinion, no better source than AI right now to help you with knowledge. It can answer in any language you want, and it can make even the most complex things easy to understand. And the first thing that we will do is check with Grok about the dividend, because that is one of the things that you should know before I will ask it what it thinks the market will end by the week. And for this dividend, the reason why I've brought up dividend many times over the last podcast is because it is a nice place to offset risk. Some stocks pay dividend over and over and over again, and even when markets go down, they keep paying dividend, and you get cash on your account, which you can use for reinvesting. But quickly, let's dive into small questions around dividend and see what Grok has to say about it. Hi there, Grok.
Evet Jim, nasılsın?
Now you have to speak in English.
No problem. Back to English it is.
Sure. Just for fun, I know that we have a lot of Norwegian users. Can you just say hi to my Norwegian users?
Hey, Norge. Keep stacking those wins. And if you need stock tips, you know where to find me.
And while at it, let's do India and Spanish as well.
Hello, India Namaste. And may your portfolios rise like the Himalayas. Hola, amigos. Vamos, let's make money.
Sure, but for India, I think you have to speak Hindi. Can you speak Hindi?
Yes. Hi, India. Namaste. If anyone's trading Mumbai hours, hit me up tomorrow evening, my time.
Well, there you go. It managed Norwegian for sure very nicely, and Spanish as well. But the topic was dividend, and I need you, Grok, to tell me the following. Why should you invest into dividend stocks?
Because dividends give steady cash without selling shares, like a paycheck from your investments. They beat inflation over time, cut taxes on long-term holds, and companies paying them are usually rock solid, less likely to tank. Plus, reinvesting builds wealth quietly. Top picks right now, think Costco or Micron from that report. Solid yields with growth.
Well, that was my next question. Based on the current geopolitical situation and the currently trends that we see in the world, which dividend stocks do you believe will perform the best, meaning that they will pay high dividends or even increase their dividends, while the stock price also will hold up good?
Based on today's trends, like easing inflation, tech supply chains holding despite trade noise, and energy prices staying unpredictable, I'd eye defensive picks from that Forbes and Morningstar lists. Think utilities like Eversource, steady 4% yield, monthly payouts, and they've hiked dividends 12 straight years. Prices won't crater if oil spikes again. Healthcare's solid too. Johnson & Johnson at 3.42%, rock solid history since 1963, even through pandemics or whatever pops up in Europe or the Middle East. For growth with yield, Ares Capital's business lending model thrives in higher rates, dishing out 8.65%, stocks up 15% this year already. Skip anything tied to raw geopolitics, like shipping giants. They're volatile. These, they'll pay, increase, and keep climbing, slow but sure.
Thank you. I believe that is all we want from you today, unless you have some final words to say about anything.
Just remember, no matter what the headlines say, the market's a marathon. Keep those dividends rolling, and you'll thank yourself in 10 years. Night, Jim.
Oh, sorry, I forgot one thing. I need to ask you the question. Where will the stock markets end next week? Will they go up in week 39 or will they go down? And argue why and by how many percent up or down?
Next week, week 39, I'm betting the markets climb, a modest 1 to 2% overall, especially the Dow and S&P. Why? The Fed's quarter point cut just hit, and Powell's hinting at steady easing ahead without panic, which keeps bulls happy despite that sticky CPI. Labor data's soft, sure, but revisions show jobs weren't as bad as feared. Traders on X are buzzing about it, translating to lower yields and fresh cash flow. Geopolitics? Middle East flares, but oil's not spiking enough to drag us. Energy stocks like in that report could buffer it. Small caps per Morningstar are undervalued and ready to rally if GDP ticks up. Think 4.58% momentum carrying over. Risks? If durable goods flop midweek at minus 2.8%, we dip 0.5% Friday. But nah, earnings from Micron kick off strong. Hold steady, it's up.
Well, thank you. That is all from you today. As you can hear, AI has a lot of knowledge. Me being in the stock market for a long time, also can hear that it's just repeating information that it found. They are supposed to have a very strong reasoning model, but sometimes they just spits out whatever they find online. You still have to do your own due diligence. But the thing about dividend, it absolutely works and can only recommend you to have a part of your investments into dividend stocks. Stock market may go down, but most of the best dividend stocks keep paying and you just reinvest that amount. And slowly, bit by bit, it just grows and grows. Been a high success for me and should be for you. As well, and it's a really nice offset. You should, when you are able, when you can, when you have enough liquidity, money, etc., for doing this, you should start to build your portfolio a little bit different. Most of you don't have too much. I know that for sure. That is why I have the $1,000 challenge, by the way. And it looks very hard, or seems very hard, to put a few hundred into dividend stocks, but come again, it is a way to grow. Many times you are just too impatient. You want everything now instead of building brick by brick. And Grok said, we'll try to remember that he think market will be up 1 to 2% next week, and argued while. Oil currently sitting at $63, gold at 3,685, was above 3,700, but pushing down a little bit lately. 10-year Treasury yield, the one that always correlates very nicely to the stock market, is also down at 4.1. We know when this goes down, stock market usually go up. One thing I always mention in this podcast is buy and sell signals, because they are very, very nice way to try to figure out if market is high or market is low. Across all the tickers that we analyze, and in these numbers is more than 45,000 tickers analyzed, 40% are giving buy signals, down from 42% last week. That is a little bit on the upper end, but it's not in any ways overbought. Usually around 45 to 47, then the market is really shaky, and I am more or less out still on the upper end. Nasdaq 23 remains same from last week, meaning that there seems to be a lot of good options for Nasdaq. And if you listened very carefully to what Grok said, it also said the same thing. And I believe that be a little bit selective, and even if markets go a little sideways or down, there should be plenty of stocks at Nasdaq that can outperform. New York Stock Exchange 48, London 37, and Oslo 32, while Frankfurt dropped a little from 48 to 44. National Stock Exchange is 35. Tokyo remained the same at 53, while China China took a huge dump from 47% buy signals to 21. Marking a possible time to get back to Chinese stocks soon. Overall, these things tells me the market is somewhat in balance. If we look at the chart, and we like to do that, we can tell that Nasdaq is in the upper end of a rising trend, and the correction is natural. Last week I said I believe market will go down. I argued why, not by much, but they would go down, and so far, as I said, I'm wrong, because during the first day of this week it's up 1.49%. We'll see how market will end today, but for sure not a very big red week. In my world, when markets are like this, it tells me that Nasdaq most likely will continue to push towards my target of 25,000 points, but we are very, very close to a place where it will have a natural reaction down. Doesn't have to be a big one, but there should be a natural reaction down, a small correction down. What I do is I reduce my exposure into the market. I'm not too aggressive, because I like to buy when there are corrections. So when I think market is a little high, I start to sell a little bit, start to build up a little cash on the account, and if I'm correct, markets take a dip, I go in and I accumulate more shares, meaning if I am very interested in one share, I think has a huge potential. Let's say I owe 1,000 shares. If I'm able to sell a little high, buy a little lower, maybe next time I will have 1,050 shares. Been doing this way for many, many, many years. We have to try to come up to a conclusion. What will next week be? We will, of course, have to look at the big geopolitical issues, and the two things that are from last week or during this week is, of course, the Ukraine situation. We just need something final there. The other thing that came up in the news during this week, maybe a little more quietly, is China is starting to show off their military force. And I've been waiting for this, and I told you over and over again, this is a 6-year-long podcast, 6th season it is, that China is becoming the number one in the world, and it has to be dealt with. No matter what, it has to be dealt with somehow. It cannot be an overpower. There has to be some sort of balance. Remember that the world has been ruled by US now for a century, and we need, if we want the Western stability, we might need at least to have a say into it. China showing off fancy aircrafts, hangars, and all of these things, showing they have technology which absolutely is in the top class, meaning that there still will be a push towards armed race. And that means that money will still continue to flow highly and massively into defense industry, weapon industry as such. While I don't think the upside in the stocks are too big, I think they will hold very, very good if stock market starts to fall, and for sure they will pay heavy dividends in years to come. And speaking about that was what Grok said, that you should have some dividends. And I think some of the huge dividend players for the next 5 years will, among the top names, will many of them be related to defense weaponry industry. We have the long lines, but we also have the short lines, and to help us a little bit about what is coming up this week, we will talk with ChatGTP and my personal Gaia. And the first we will ask her is then, of course, what are the economic numbers coming up? Are you awake, Gaia?
Got it. Gaia it is. If you need anything else or want me to dive into that market preview, just let me know.
Yeah, I need you to tell our listeners, because right now you are speaking on my podcast Trading Tips with Jim, and I want you to tell the listeners which economic data is coming out next week. What are the top items that any investor trader should know about days and what it's all about?
Absolutely. Happy to jump right in. So for everyone listening in on Trading Tips with Jim, let's talk about the key economic data coming up next week and what you should keep an eye on. First up on Monday, we've got the Chicago Fed National Activity Index. That gives us a pulse on economic activity. Later in the week on Tuesday, watch out for the S&P Global PMR data, manufacturing and services. That's going to show how businesses are feeling and whether the economy is heating up or cooling down. Midweek, we get housing data, new home sales, and on Thursday, keep an eye on GDP growth numbers and jobless claims. Those are biggies for understanding if the economy is still in a strong spot or if we might be seeing some bumps. All of this matters because these data points can move markets, and as traders, we want to know what's on the radar. So stay tuned, keep those dates in mind, and we'll see how it all shakes out.
In your opinion, which one has the opportunity to move the market, and what are the forecasts?
Sure thing. So if we're talking about which release might really move the market, I'd say keep a close watch on Thursday's GDP growth rate numbers and the jobless claims. Those are often big market movers because they give a snapshot of economic health. If GDP growth comes in lower than expected or jobless claims are higher, that could spark some volatility. As for the forecasts, the consensus for GDP is around a slight negative growth of about minus 0.5% quarter over quarter, which is a bit of a slowdown. Jobless claims are forecasted to hover around 231,000 new claims, pretty close to the previous numbers. In short, those two reports can definitely set the tone for the market, so they're worth watching closely next week.
And you using a little bit of reasoning, what is your guess about GDP number? How will it come in?
Absolutely. I can give it a shot. So if we do a bit of reasoning based on recent trends, and of course this is just an educated guess, I'd say the GDP number might come in a little better than that minus 0.5% consensus. We've seen some resilience in consumer spending and a few positive surprises in things like the PMI data, so there's a chance it might be a little closer to flat or just a slightly smaller contraction than expected, maybe something like minus 0.3% or even just barely negative. Of course, that's just a guess, and markets love to throw curveballs, but it's always fun to do a bit of speculation, and we'll see soon enough how close that is.
Yeah, and just quick reminder which day were we talking about?
Absolutely. Just to keep it all straight, the GDP and jobless claims numbers are coming out on Thursday, September 25th. So that's the day to keep an eye on if you're looking for those potentially market-moving data points.
So next week will be Thursday, the day that there will be economic numbers that may shift the market. But there will be some quarter results coming out this week. Last week, I gave you the same task, and you said that in your opinion, you thought FedEx would be one to watch, General Mills would be one to watch, and Lennar would be one to watch, and you thought they all would go up after quarter results. And FedEx released quarter results yesterday of the markets, and in pre-market, FedEx is up 5%. So by that, absolutely correct. General Mills up 2% since quarter results is out, while Lennar is not still out. But we want to focus, that was last week, we want to focus about this week and which quarter results are coming out this week, which are the major players that users, listeners should keep on their radar.
Absolutely. Let's dive into this week's lineup. So for the coming days, a few key quarterly results that could be really interesting for everyone to keep on their radar are first, early in the week on Tuesday, we've got Micron Technology and AutoZone reporting. Micron often moves the tech sector, and AutoZone can be a good bellwether for retail and consumer spending. Then on Thursday, Costco is a big name to watch. They're always a highlight, especially for seeing how consumer staples and big box retail are doing. So those are some of the major players, and like last time, we'll see how they perform. Hopefully we'll get a few more wins like we did with FedEx.
Sure, but that means you have to tell which direction you think the stock price will go after the quarter results. So give a qualified guess over the most important stocks and how it will go after quarter result. Will it go up? Will it go down? And give a short reasoning why.
Absolutely. Let's do a little bit of prediction fun. So for the big ones, first up, Micron Technology on Tuesday. I'd say there's a decent chance they could see a bit of an uptick. The reasoning, the semiconductor sector has been showing some resilience, and if they beat expectations on demand or give a solid outlook, we could see their stock nudge upward. For AutoZone, also on Tuesday, I'd lean slightly positive as well. They've had a pretty steady track record, and if consumer spending on auto parts is still strong, that could give them a little boost. And then there's Costco on Thursday. I guess they might also lean a bit upward after earnings. They tend to be a favorite in times of uncertainty because they sell staples. If they show strong membership growth or steady sales, investors might reward them with a little bump. So in short, my guess is a cautiously optimistic up for those three. But of course, the market loves surprises.
Thank you. The last thing I will ask you about is how do you think the market will play out next week? Will Nasdaq be up or down, and by how many percent?
You're welcome. All right, let's put on the forecasting hat one last time. So for the NASDAQ next week, given everything we've talked about, the mix of economic data, the earnings reports, and just the general sentiment, we might see a bit of a cautious but slightly positive move. My guess would be that the NASDAQ could end up maybe around 0.5% to 1% higher by the end of the week if those earnings come in solid and the economic data isn't too gloomy. Of course, markets can always surprise us, but let's say a modest 0.5 to 1% upward drift if things go as we hope.
Well, thank you, and we will speak next week. That was all from AI. Now you see how I use AI. So what do we draw out of this conclusion? Well, Grok and OpenAI, Gaia, thinks markets will be up next week. Grok a little more optimistic, thinks markets will go up by 1 to 2%, while Grok is a little lower end, closer to 0.5 to 1% upturn. They both argue good general sentiments. They think some of the economic numbers will come in better than expected, and being a driving force. And of course, it helps the very, very strong momentum that is in the stock market. You might be a little lost. How do you use all this information? You heard, for instance, OpenAI say that from the quarter results, Costco will have quarter results, and they think it will go up afterwards. And Micron is also a stock they think will go up. Hard to say if this is correct. What I do, I feed AI with a lot of information. In this case, I didn't feed it much information about other than the quarter results themselves. but we can feed more information to get an even more qualified answer. But the lesson out of all of this is that you can use technology to help you if you are not too familiar yourself, at least help you to try to get to something of a better strategy. That means, for instance, let's say that you are a gamble, you like to gamble, but you don't know where. You heard that Micron is a company that might do very well, and Micron is much more volatile than Costco, for instance. Meaning that if I were you and you want to try to score big, I would dive deep into Micron, see where it is, try to learn more about Micron, and Micron should then be on your radar. Speculating that you will be right about the quarter results, investing just a little bit before, and sitting over the quarter results. Last week, as I said, Gaia said FedEx, she thought FedEx would do good. FedEx is up 5% in pre-market after quarter results. That translates to a lot of money. The other thing is that since we do not know, there is also a slight, not confirmation, but there are some slight logic to both AI and Gaia, thinking that, Grok and Gaia, thinking that markets are strong. It has to do with your risk position. If they both had said that they believe markets are overpriced, highly shaky, etc., it can be an indication that maybe you should reduce your portion. I will continue to use AI a little bit more moving forward, so you can see how it can be used as a tool. And I will keep feeding it more information, making it smarter. That leaves us very close to the $1,000 challenge. First, Grok said it thinks market go up next week. Gaia said it thinks market will go up week. And I disagree a little bit. I think markets might go down, but not by much. The consensus then means that there is most likely no huge volatility in the market, so it will either go up a little or go down by a little if we summarize the three of us. In the $1,000 challenge, I've been trying to grow $1,000 as fast as I can. I've been in and out of different stocks, and the last buy was NIO, and we've been sitting a long time in NIO, but finally moving. Last week I said that I was very disappointed about NIO getting more cash. And usually that holds like a lock, but NIO been pushing ever since, and I have to admit that I am a little bit lost. All analysts agree that NIO is supposed to be closer to 8. It's undervalued. I agree totally to this. But I also have so long experience when people get shares really cheap, and they got it around 550 or something. The stock price is now 737. Very often they do these things. They get stocks cheap. There is a big market apparatus pushing news, pushing the stock up. Then they start to dump, take short-term profit from the stock. So half of me is saying that this is going to happen with NIO. The other thing tells me that with current evaluation of NIO, it is still too cheap. And these people who were able to get in on the deal was just extremely lucky. There is a higher chance that it will push upwards. But we are at the level 7 to 8, where I said that I have to consider if I should sell and go into something else. And I've been scanning stocks where to go. Micron is absolutely one of these. Rocket Lab is another stock which I'm very interested in. I think there is a potential for upside. What will I do? Will I now go for sell? Because I promise you I will tell you before I do anything. I will tell you what I will do. I think, if I remember correctly, I said that last week I would be surprised if I will still sit in NIO. And even though talking directly on live unedited, I am not sure. Pre-market is looking good. I believe that given current price, the downside is 650, meaning that if it drops back, it should drop only to 630, 650, unless markets fall hard. But it doesn't. There is no sign that the market should drop high. There is more sign there is a momentum and just small fluctuations, meaning that there still might be a positive overweight. And with all that in mind, I just have to come to a conclusion. I'm so in doubt what is the correct thing to do. Usually when you don't have any direction, you sell and you just wait till you have more clear indication. At the same time, the stock can push very, very high, and this is all about taking risks and doing. We take a lot of risk. I've been growing $1,000 to $5,188.91 on the way to 10,000. I will stay in NIO. I will stay one more week in NIO. Just have to evaluate from time to time and see how it goes, because that $8 is still cheap for NIO. Personally, I think NIO will go to 25, and as you know, I invested heavily personally into NIO. Bought NIO a little bit expensive in the beginning, but I was hunting for stocks, buying I think in total 7 times, giving a very, very nice average for my NIO shares, because I believe they have a strong upwards potential. I will sit in NIO this week. I will tell you before I sell it, and if stock for some reason go very wild, I will write it on the YouTube version if and when I sell it. But so far, still will sit in NIO, and that's it. That's all for today. I hope you enjoyed it. I hope you will like. I hope you will subscribe. I hope you will be back next week. More than anything, I hope that your portfolio will be much greener by the end of the week than in the beginning of the week. Till next time, just bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information, you agree and are held liable for your own investment decisions.